All right, everybody, a very good morning to all of you. It's been such a while that I have made a video for you all. So it is the day today, and I'm gonna just go through a quickly sentiment video. I'm not gonna make a longer video for you all. So sentiment. Let's have a look where we are sitting right now. It is 5th of February, and we are almost 9:30. New York Stock Exchange open time. So looking at the sentiment, it has been a very mixed bag across the board. We are having yen leading the pack. Obviously there are some certain reasons behind that. Looking at the economic calendar, we have had a really nice print coming out from Japan, which was, if I'm not wrong, it was all right, so here. So we have had really nice wages uptick 4.8% prior to 3.9%, and the consensus was 3.8%. So it's been a long time since the BOJ clearly indicating that they want to see a really nice and sustainably uptick in the wages, so that the uptick in the wages can sustain the inflation above 2% target. So they said clearly that if the wages continue to push higher, we can and will increase the interest rates. So that is the reason we have had here yen leading the pack across the FX section, and also we have had. Let me just show you another commentary we have had here. Okay, so right here. So BOJ official says BOJ will keep raising rates if underlying inflation accelerates toward 2% target as projected. So what does that mean? That means that underlying inflation will stay up uh, because we are having really nice wages ticking up. Remember, higher wages means higher inflation. People have more money in their pockets, and they will spend more on services and goods. So that clearly give us the rationale that why the yen is currently the star of the day. So weakest is the dollar, and there again have a story for it. It was all about tariff. We have had really how I can say that uh, conflict with Mexico, Canada, and China. So after the inauguration of Trump, he clearly stated that he's gonna put 25% tariff on Canada and Mexico, including 10% tariff on on China imports. So after that, it was a really nice push higher. If okay, so let me just show you the USD CAD chart. So at over here last Friday, or let's just say on the weekend, we have the Trump officially signed an executing order stating that he's going to impose 25% tariff on Canada and Mexico, and we have saw a nice 1.5% up. And after that, on Monday, there were talks across the board, and firstly the Trump has a conversation with the Mexican president, and the agreement got reached. And after that, we have had uh, nice headlines coming out from US that Trump and Trudeau really had a nice conversation, which eventually feared back the tariffs, which was about to get implemented. Now it is currently uh, let's just say pushed forward to next 30 days. So we have seen a nice push down after those headlines. So clearly the bias here for me is that the dollar will push lower further if we do not get any immediate immediate tweets, let's just say, from Trump. So that was the FX section. Other than that, antipodians currently consolidating, not giving us any sort of of a bias for short term or long term. It's just we are completely focused on dollar right now. I mean, I can say that the yen is on my radar, but not that much. Moving to the equity section, equities. I mean, it is just let's just say it's a mixed bag. China 50 is down negative 2%, and if I just show you the chart of China 50, is just sitting in this range. It has not gone anywhere. So I mean, sometimes it's down, sometimes it's up. We don't clearly know that which direction it's gonna go. So we just staying patient on this one. Equities. Uh, we really had nice run up toward. From 5,800 level to 6,100 level, which was the higher highs. But after that, we haven't had any nice push to the upside. We have deep sea clearly giving a negative risk off environment to the equities. After that, we have had China retaliation news coming out, which also giving a nice push down to the equities. But clearly, we are not seeing a much of a momentum in equities. Commodities, a mixed bag. Oil is just doing its thing. It has been pushing lower. Forget about it. This one number is just fake. So uh, it is on a downward momentum, but I'm not really convinced to jump in right now. We have a really nice gap sitting here between 72 to 67 level, but I mean, just want to stay patient on the commodity side. Treasuries just continue to push lower as the inflationary pressures seems to getting eased from across the board. US yields hitting fresh session lows, fresh session lows. Okay, my English is just, I know. So session low 4.4%, and followed by the UK kills 4.4%. So with that being said, clearly I just want to focus on right now ISM services, which we just gonna get within 15 minutes of time period. I'm not very convinced to trade it on a beat. I'm really biased toward a nice push lower, a miss across the board, which is going to be my preferred way to trade the dollar right now.
Just
So
approaching
with
1
that
minute now
being
to the
said,
final S&P
it
Global
is clearly a
US
mixed bag
Services PMI.
across the board. And if you have any questions, don't hesitate to let me know.
Fez Barkin, just